All right, so many investors say they believe the Federal Reserve will likely keep its key short-term interest rate unchanged, despite criticism from President Trump and his demand that the Fed reduce borrowing costs. 2 weeks ago, the president mentioned he could fire and would fire Jerome Powell, but the president later said he had no intention of doing so. But the president and the Treasury Secretary, Scott Bessent, have said the Fed should cut those rates. So for more insight, Jason Matthews joins us from Matthews Financial and Insurance Solutions. Jason, thank you so much for joining us today.
Thank you for having me.
All right, so what do you think the Fed is mulling over right now when considering whether to keep the rate the same, hike it, or lower it?
Right now, most economists think that right now the Feds today are going to keep rates the same and just see how everything plays out, because there's a lot of things going on. One is we have to worry about the economy might slow down a little bit, but we just got the jobs report, which was excellent.
That was good, right, for April, right?
Right,
Consumer
great.
spending solid also.
Exactly.
Right? Yeah.
But then, so you have that. But then you have these tariff deals that's happening this weekend with China, and that could be a huge impact for a lot of our manufacturing.
All right, so the GDP, that shrank a little bit for the first time in 3 months. Is that something the Fed will be considering as well?
Yes, absolutely. Because the worst thing they want to have is us going to recession, so they're going to definitely keep an eye on that.
All right, so now, does the possibility of keeping the interest rates the same and lowering them, what does all that mean to the average consumer right now?
Yeah, so if they stay the same, what you're going to see is you should be watching now, especially if you have a variable rate on your HELOC loan and your credit cards. You want to watch and see if they do possibly go up, because the Feds might be worried that we might have a spike in inflation. If we do, that means the Feds could raise interest rates, and so your borrowing costs on your variable rates, for such as your HELOC loan or your credit card rates, could go even higher than what they are now. So that's a huge thing. But if they think that we're going to have less inflation, it drops down, lower the rates, that means your interest rates are going to go down as well.
So, all right. So the issue with tariffs right now, we don't have the full effect of it yet. And so do you think that is, we saw the GDP shrink, but we don't know the full effects of the tariffs right now. But, is that something we'll see 3 months down the road? And is that when the Feds could act?
Yes, definitely. Okay. They're going to definitely see how that happens, because if we have tariffs, it could cost us more inflation, which means this. If Apple has to bring their products in, it costs them more because they have to pay this tariff. They might bring it back onto the consumer pays more. That can cause inflation. For the usual playbook that the Feds might do then is raise interest rates. That's why they're so hesitant to see what happens with tariffs, because it could cause more inflation.
But if there's more inflation, that means they'd lower the interest borrowing costs?
No, they'll actually raise the borrowing costs, because now they want to slow down the economy, and at that point, to fight inflation.
To fight inflation. All right, so is there any good news in what the Fed is doing right now, if they keep it the same or if they lower it or hike it?
The good news is this. One is the economy is slowed down a little bit, but it's still plugging along, right? There's certain sectors are doing well, certain sectors are not, right? So I think this is just a time where they're just having to wait and see what happens next, and you should definitely have a wait and see towards your own finances at the same time.
That's what I wanted to ask you about. So what would you advise your clients right now? What are you telling them at this particular moment, considering what we are looking at financially for the average consumer?
Yeah, so we're going to look at two sides of the coin, right? The first side is if you're a borrower. If you have a HELOC loan, if you have a variable credit card rate, you're going to try to see if you get a fixed interest rate on those right now. So you might refinance your HELOC with a bank that might give you a fixed rate instead of a variable rate. And for other people, if you have credit card rates that are variable, you might look at getting a personal loan right now and get that fixed.
So can you ask the credit card company to fix the rate?
Yeah, or you can just go on bankrate.com, see who might have a 0% interest rate for 18 to 24 months, apply for that, and transfer all that over to that card. If you are a retiree, you might want to lock in those fixed income rates, because you want to lock in your fixed income that's going to be that income you're relying on for your retirement at that time. So it really depends what side of the coin you're on.
For the credit card specifically, because we had a report that a lot of people are in credit card debt right now, we could see their credit card rates increase. So that means if you're paying off your credit card right now and you're only doing the minimum payment, you're going to be in it for the long haul, right?
Very long haul.
Yeah. Okay.
Very, very long haul. That's why it makes sense to say, hey, let me see which credit cards might have 18 months and 0% interest. Transfer all those credit cards that have 20, 24, possibly 30% over to that 0%. Now, if I do pay that same amount that I was paying before, it'd be faster to pay off, so I'm not stuck in the rat hole of all this credit card.
That's what you advise someone that come into your office
Absolutely.
right now. What other advice would you give someone right now at this particular moment?
Hey, do that. Lock in your interest rates on your bond rates right now, because if they do lower rates, then your bond rates are going to go down. Also conserve. Be very conservative right now. Only buy the things you need. Don't jump up and buy things because you're scared of tariffs.
Jason Matthews with Matthews Financial and Insurance Solutions. Thank you so much for joining us.
Thank you for having me.
We appreciate it. Coming up with Mornings on 2 to 9.